After Friday's close, the Nasdaq is now officially in bear market territory. So let's talk a little bit about the state of the market. Let's talk about a couple of headlines that came out throughout the day on a Friday. And then I do want to touch on the bullish analyst that is suddenly turning bearish. A very interesting turn of events. Now, before continuing, I just want to make something very, very clear here. Of course, it's not great to see your portfolio lose 10% during one day, 20% year to date or something like that. No, that's not great. And I'm not trying to make the case as, oh, you should celebrate seeing your portfolio down that much. No, some people are, of course, much older than me, so they would rather see the stock market be green. Some folks are young, you may be even younger than me, and are quite happy to see the opportunity that they can increase their positions at, well, super low prices. So no disrespect to anyone in each of the categories there. These are, of course, just my opinions. I don't know more than the other person. Okay, maybe I do a little bit, but I'm not an economist, I'm not an analyst. And by the way, if economists and analysts were actually pretty good at their jobs, they will be very, very rich. But guess what? I'm yet to meet one economist and one analyst that is very, very wealthy. I wonder why that is. Yeah, I know. Even I couldn't answer that question. So anyways, before further ado, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Make sure to check out the last two videos I made on the channel. I think those are quite informative. All right, so first up, the heat map. This is probably the worst heat map that you've seen on this channel since probably the COVID crash of 2022. You really have to zoom in to actually look at some green. Well, of course, you won't find any green here in finance, in tech, in electronic technology, in retail, although in retail maybe a little bit here with the Target. Okay, one very interesting name that was green. I have to go all the way under Coca-Cola here, and that's Nike. Of course, Nike on Thursday got hit got hit hard. Same with Apple, although Apple was still down on Friday. But Nike got hit hard on Thursday because of the Vietnam tariffs. And you might already guess why it's up on Friday. Vietnam is coming to the table. Of course, more on all of that a little bit later. And if you've watched my last video, you know I already bought 4 stocks. And in Sunday's video, I'll explain my other buying activity in the portfolio review. All right, so first up, congratulations to retail, because usually you don't really see these types of activities. Retail investors buy stocks at largest level in 10 years, according to JP Morgan. I believe the number was $4.7 billion. Not bad. Congratulations, you've learned to buy the dip. It's not really a dip anymore, it's to buy the huge hole in the stock market. So congratulations. I mean, retail evolves, which is always good to see. The 10-year actually dropped under 4% during the day. It did finish the day at just 4%. Of course, every percent that goes down is billions and billions, if not more, of, well, refinancing debt that is getting saved, right? Because the whole goal here, well, maybe I should have rephrased this a little bit different. In my eyes, as I've explained in the other video, and I think a lot of people do agree with that, interest rates will come down, the government will refinance trillions of dollars in debt at lower rates, saving them hundreds of billions of dollars. Okay, so when you see the 10-year come down, well, usually what happens is the Fed will cut rates and then you refinance your trillions of dollars of debt at lower rates, everybody's happy. Now, of course, it remains to be seen how much lower the 10-year will drop. Now, in the meantime, we have this. We have commodity prices plummeting. So from the stock market's perspective, it's not great what we're seeing right now. But from, I don't know, general people's perspective, this isn't that bad, right? If you look at commodity prices starting to go down, now I'm not saying we are already going into deflation. Some might say disinflation, some might say deflation. I mean, deflation, of course, every time there is deflation, the economy is not really moving at all or much. But at least things become more and more affordable for the normal folks out there, which, I mean, do we see this as a bad thing or do we see this as a good thing? Because on the one side, we're like, inflation has gone up so much, wages not at all, things have become way too expensive, people are not happy. So will people be more happy if things get cheaper or not? What do you think? Moving on to the VIX. The VIX has reached a high that we have not seen since, you guessed it, 2020, the COVID crash of 2020, although the peak of the COVID crash, March, April of 2020, was much, much higher, was actually close to double where we're at right now. But every time we did peak, well, something interesting happened. So this even shows us all the way back to, I think, 2005 or so. So we are not seeing something that we rarely see before. No, we've seen these spikes happen before. Now, what has happened afterwards? So again, here we look at Subutrade's charts, great follow on X. So what did the S&P 500 do after the VIX has reached 45, first case in a month? Now here as well, we have 1 day, 2 days, 3 days, 4, a week, 2 weeks. Those are all the dates here. We're going to look at the averages and the amount of times we're positive or negative. As you can see, the odds are in our favor no matter when you're looking at these things. 1 day to 2 weeks, right? 1 day later, 75% of the time we were green. Of course, it is very possible that on Monday we're going to be red and we're going to be in that 25% category. It is very possible. Then we have 83%, another 75%, 83% of the time. A week later we were green, then 2 weeks later 75%. So here, unlike the other videos, there is no 90 or 100% of green, but then again, this is only 2 weeks. I'm pretty sure that if we're looking at 3 months, 6 months, maybe 9 months, we're going to get that 100% green. But here I like the odds, right? If you tell me 75 to 83% chance that we're going to be green in the next day, in the next 2 days, next 3 days, 4 days, a week, 2 weeks, I'll take those odds. But I also know that we are still in that uncertainty period. So yes, there is a chance that we might be in that 17 to 25% of the time where we are going to be in the red. Moving on to the next stat. The next stat is the S&P 500 after 2 consecutive days of 4.5% declines. And here as well, I'm sorry to say, but here I like my odds as well. And here we are going further in the future, a month later, 2 months, 3 months, 6 months, a year later. So let's start again, 1 day, 2 day, a week later, 80%, 70%. So here as well, good odds, in my opinion. Of course, we can be on the other side of the coin. 2 weeks later, the odds are actually, well, getting a little bit worse. 60% of the time we were green. But then a month later, 90% of the time. 2 months later, also 90%. 3 months later, we're dropping here to 70, but then 6 months and 1 year later, it's 90 and 80% of the time that we are going to be green. And so, yes, of course, it's not great to see, well, whatever is happening in the market right now. And yes, I'll repeat the same thing again and again. We are in 2025, we're not in 1840, we're not in 1890 or 1929 or 1940, etc., etc. No, different time periods, completely different realities as well. So, okay, we might look at history, see what has happened, learn from that, and make our own, well, assumptions. We can speculate on what might happen in the future. And like I said in the last video, everybody loves to say be greedy when others are fearful and be fearful when others are greedy, only when the markets are reaching all-time highs on a weekly basis, right? These were the phrases that you probably heard a lot in January, in February, in 2023, in 2024 as well, right? And then you've heard the other phrases. Oh, the market is too high, this stock is too expensive, I'll buy it when it dips. Well, then it dips, and then you're like, no, actually, I think it will go down even further, because on the technical chart, you can see that the support line is actually 3 candles away, so I'll wait for that. It's funny how things work, right? When everything's green, everybody is a philosopher, everybody's like, I will buy the dip, I will buy the dip. But when the dip happens, or in this case, the crash, the correction happens, when things are discounted heavily, when the markets are red, when there is blood in the street, suddenly the same people actually do not want to do anything and are like, oh no, I'll wait. It's a bad time to buy. I'll wait. Yeah, it's human emotions. To be honest, it's human emotions. You'll see this time and time again. And human emotions is something that rarely changes, especially when we talk about money, especially when we talk about the stock market. Now, there was also something quite interesting that happened today. Job report came in better than expected. Unemployment rate came in at 4.2%, a bit higher than the 4.1% that was previously. But still, it shows that it's still pretty strong. Of course, the impacts, the negative impacts of tariffs, of potential recession, of all the government layoffs will probably happen further down the line. But in my opinion, we still have a big margin to play with. Going from 4.2 to above 5% unemployment is still a big gap. We also had Jerome Powell speak today, and he's like, oh, prices are still going up. People are not happy that prices are going up. That's not great. They want to see prices come down. And I was like, do you know that your own target is 2% inflation, which means that prices will continue to go up? They'll just continue to go up slower than previously. What you are saying is that you're looking for deflation, because deflation is when prices come down and not prices that go up slower than before, because that's still inflation. So I was very confused. But then again, if we go back to 2021 or so, when we started to print, well, not me personally, I wish I had a money printer, but when the US started to print trillions of dollars and they started to distribute free money to people and then try to convince everyone that inflation was transitory, that was fine, right? That was okay. Seems quite strange to me. Moving on. Believe it or not, we already have some, countries that are willing to come to the table. So Argentina's Milei says negotiations for zero tariffs with US are underway. Trump and Vietnam's Lam agreed to discuss tariff deal to meet soon. Vietnam willing to cut tariffs to United States, Trump says after productive call. We also had Cambodia come to the table already. They say here, in spirits of strengthening our bilateral trade relations, Cambodia has committed to promote US-based product imports with an immediate reduction of 19 product categories from our maximum 35% tariff bound rate to 5% applied tariff rate as attached. So I guess some countries are moving faster than others. But I do want to say one thing when we're talking about these things, right? Okay, you're going to lower the tariffs, but who says someone will import these products, right? You still have to find someone that is willing to import US product in these countries. And you will only find someone that is willing to do that if it's financially beneficial for that person or that company. I rarely hear people talk about that. Last thing here is the bullish analyst, Dan Ives, the fancy suit, colorful suit guy on Wall Street that seems to appear more and more on TV than anything else. Well, apparently, according to him, he said the following: I've been through the dot-com bubble, global financial crisis, and COVID crash. This is the biggest debacle of them all. This is self-inflicted economic Armageddon. To which this account right here actually made a very good point and joke. Obese man feels pain in stomach after first day of fasting. Because let's be honest, everybody is already trying to reach conclusions, and we're not even 48 hours in after these announcements, which, by the way, the tariffs only come into effect, the major ones, April 9th. And China, by the way, they set a date, you know when? One day after, April 10th. Not April 9th like the United States, April 10th. Why do you do that? Do you do that because you want to get the upper hand, or do you do that because it just gives the other party more time to think about the next steps, right? Why do you think the date is 7 days after the announcements? It gives you just another 7 days to negotiate. It gives 7 days to other countries to rethink their policies, and maybe, just like we've seen with Cambodia, with Argentina, with Vietnam to come to the table and actually negotiate a new agreement. If China really wanted to screw the United States right now, they would not put that deadline a day after the US deadline. They would probably put it as soon as possible. Just me speculating here. Of course, I can be completely wrong. Now, going back to the Dan Ives thing, right? This is the biggest debacle of them all. This is self-inflicted economic Armageddon. To which I said in all caps to add some dramatic effect here. You know what was self-inflicting economic Armageddon? Not raising interest rates in time while printing out trillions of dollars and lying to everyone about inflation. But of course, back then stocks went up and everything was either the LeBron or the Messi of AI, so it was cool, dude. I mean, to be honest, I was already sick and tired of his stories even before the market started to crash, and now I'm even more sick and tired of his excuse and his explanations. Probably his clients are putting some pressure on him because, well, not everything is rosy. An Apple that barely grows and was trading at a PE of 33 times or something like that, while demand for iPhones in China were dropping like a rock. And, well, even Palantir was super expensive, and yet he came out with ridiculous price target. Even Tesla at 400 plus, super expensive, yet came out with some fairy tales as always, right? He's always great with the stories like, oh, Jensen, the godfather of AI, is reporting tonight, etc., etc. I was already, come on, guy. I mean, again, going back to what I said before, economists and analysts. Have you ever met a wealthy one? And to be honest, analysts that spend more time on TV than doing research, well, to me, you just become a TV personality and nothing more. And so, although plenty of people will tell you that they know for certain that this does not work or that this will work, I can tell you with 100% certainty that I don't know. I wish I knew, but I don't. I don't have a crystal ball. I don't know. What I do know, me personally, is that I have no problem buying great companies at today's prices. If not today, then when? When markets are at all-time highs? No merci. Okay. Maybe when we have less uncertainty, maybe I'll be adding way more because risk reward maybe might be good. But I'm already seeing so many deals today that, to be honest, for me, I don't care. If you think that an Alphabet, a Meta, an Nvidia, an Amazon, you name it, if you think that these companies will not be much bigger in the future, then I'm sorry. I'm sorry to say that I just don't buy it. I just don't buy it. I am buying the stock. I just don't buy your excuse and your story. So that's about it. Probably talked for way too long. Apologies for that. But yeah, that's all I've got to say. Keep calm. Keep focused on the long-term future of your portfolio. If somebody tells you that he knows exactly what's going to happen or what's not going to happen, he's lying through his teeth and probably isn't even invested with his own money. So yeah. That's all I've got for you right now. Like, subscribe, do all of that. Enjoy your weekends. Go for a walk, go visit family, go visit friends. It's way more important than staring at this screen. So see you all in the next one. Bye-bye.